Okay, welcome to the Wall Street crossover show sponsored by Admiral Markets. It's 1 p.m, just half an hour to go before the September non-farm payrolls. The whole world is sitting on the edge of its seat, aren't they, Mr. Darren Sinden?
They are, Zach, yes, rightly or wrongly. Everyone's waiting to see what this number is. I think the truth is, though, as we saw heard when Janet Yellen spoke after the FOMC meeting in September, the Fed's now looking externally to the US for its cues about when to raise rates. That's the reason they didn't pull the trigger in September, or so they said, because they were concerned about China and the emerging markets. Obviously, that situation hasn't really changed. This number today will probably be symbolic more than anything else. If it's a good number, then the hawks will get more excited. But a weaker number obviously plays into the hands of the doves. But probably more important of all is, most important of all is how much weighting the Fed are going to give to the overseas markets as opposed to their own domestic economy.
Are we looking to a bit of a revision of the August figure as well?
Possibly. I mean, most of the numbers a bit of late have been revised, so I wouldn't discount that, but by any means. But I wouldn't like to speculate which way it will be.
Right, let's go on to the data released over the European session.
Okay, well, not a great deal of data per se in Europe, but two numbers that have taken my eye this morning. The first, very impressive UK construction PMI number for September, came in at 59.9, well ahead of the forecast 57.5, and even further ahead than the prior read in August of 57.3. There had been some concerns that the construction industry had taken a dip over the summer. If it did, it's come fighting back into the early part of the autumn, so good news there. Moving into the Eurozone, we had PPI, the Producer Price Index number for August, released this morning. Here we look at the year-on-year figure, and it fell by minus 2.6%. That was weaker than the expected minus 2.4%, and well down on the prior read of minus 2.1%. Just to put this into some kind of context, PPI has effectively been falling since June 2011. So we've had 4 years of contracting factory gate prices.
Horror story.
Yeah, and that's the real deflationary story in the Eurozone. It plays out there. Perhaps Mario Draghi will address that when he speaks this afternoon. Ironically, he's standing up to speak about 1:30, just when nobody's going to be paying any attention to anything he says. It was a strange choice of timing, but nonetheless, he's due to stand up and make some comments this afternoon. And then in terms of what we can look forward to next week, we've got Eurozone PMI data, the Purchasing Managers Index data for September on Monday, and we've got the Bank of Japan press conference on Wednesday, and our own Bank of England interest rate decision to look forward to on Thursday next week. So there's plenty of stuff to keep us occupied in the coming week. Okay,
and on to the European movers.
Okay, right, well, first of all, we start with Air France KLM, the French-Dutch airline, €6.10, up about 1.94% this morning. And the airline is likely to announce significant job cuts on Monday in an effort to reduce costs after talks with the pilots' unions failed. This is one of the last of the sort of traditional style airline businesses that hasn't restructured and hasn't moved to a more sort of low-cost seating plan arrangement, and they're finding it increasingly hard to compete with the likes of Ryanair and EasyJet.
I bet the pilots are kicking themselves after presumably going for more money and better conditions and finding out that they're going to get the sack.
Yes, it would seem that they've overplayed their hand there somewhat, and we'll know more probably on Monday morning. And then back to the UK, Standard Chartered Bank, ticker STAN in London, 675 pence, up around 4.26%, and the bank has been written up by a broker based in Hong Kong called Kim Eng, and they say as a firm that the worst is now priced into Standard Chartered, and they published this buy note today, so up they go. Sort of contrarian play on emerging markets there, if you will.
Kim Eng will be pleased at the publicity.
Yes,
which obviously
indeed.
Worked.
Absolutely.
Right, M&A rumours and movers.
Okay, well, over in the US, a stock called PMC Sierra, that's PMCS, the ticker in the US, is a specialist chip manufacturer, is said to be seeking a sale. They are rumoured to have hired financial advisors to aid in the search for a buyer for the company. So it is quite an interesting business. It makes chips that are used in networking equipment, data centres and data storage systems and mobile phone networks. However, the company has had declining sales over the last couple of years. It does, however, have some pretty high margins on its business, and they may prove attractive to potential buyers. Just to give the audience a flavour of what sort of price we might expect. The current market cap of PMC Sierra is around $1.3 billion. So it's not huge, but still over $1 billion. The stock has underperformed a weak chip sector this year, and in fact was down 26% year to date earlier in the week. However, the news that they were likely to be appointing financial advisors stirred the stock, and it rallied 7% yesterday to close to around 7.25 on the news. So an interesting one to keep an eye on, and there will be more developments in this space very soon, I'm sure.
Okay, on to the US data points, which we've touched upon.
Yes, all roads lead to 130 and September's non-farm payrolls, as you said. The forecast today is for a number around 201,000. The unemployment rate is not expected to deviate from 5.1, which is exactly where it was last month. Obviously, we've had numbers either side of forecasts of late, so it's anyone's guess where it comes in, but that's where the bulk of people have put their best guess. In terms of data that we've got next week, probably some data that actually means more than the headline employment numbers. First of all, we've got services PMI and the ISM non-manufacturing index data to come out on Monday. Now, this never-ending round of Fed governors speaking continues with John Williams speaking on Wednesday. And then on Thursday, the FOMC minutes from the last meeting will be released, and people will be poring over those, especially after today's data. Remember, we've only got 2 further Fed meetings before the end of the year. They don't meet in November, so just October and December to come before we move into 2016.
Right, okay, well, let's go on to the US pre-market movers and levels.
Okay, well, we start with a stock that's probably not that familiar to European viewers, but Nordstrom Inc., ticker JWN. It's a fashion retailer in the States. $74, up 3.6% pre-market, and the US retailer rallies as it sells or announces the sale of its credit card portfolio to TD Bank for around $2.2 billion. On the back of that, it's announced a $1 billion share buyback and a special dividend for shareholders, I believe, of around $4.85 a share. So quite good news if you're a Nordstrom holder. And staying in the tech sector, just touched on PMC Sierra, Micron Technology reported last night. MU is the ticker there, another one of the chip stocks that's been under pressure. $15.65 pre-market, up just a shade under 6%. They posted an earnings beat last night, which wasn't anticipated, and the market likes what it saw there. However, interestingly, the market has ignored a lighter guidance that was hidden deep in the earnings report, which suggests to me that there's been a bit of a short covering exercise going on in the shares of this one. That may well continue into the main session. And in terms of levels to watch, all in all, it's been quite a pedestrian week for European cash equities. FTSE, we've put 6,100 for its round number value as potential support today. 6,170 will be the level that we'd need to punch through to make further gains. For the DAX, round numbers at both ends now, 9,600 on the downside to play 9,700 on the upside. S&P and the Dow really haven't done very much at all this week so far. 1,915 on the downside for the S&P, plays 1,935 to the upside. And for the Dow, 16,270 is our downside level, plays 16,373 to the upside. Obviously, that could all change at 1:30.
A bit more normal, let's say.
And then currency-wise, the euro a little bit easier against the dollar, so 111.35 today on the downside, plays 111.80 to the upside. The Aussie dollar is testing at that 70 handle once more, so we go with 70 even on the downside, plays 70.44 to the upside. Dollar yen, it's all gone quiet over there, if I can use the football parlance. 120.04 on the downside, plays 120.54 to the upside. And in cable, 151.30 to the downside, plays 151.97 on the upside, ahead of next week's Bank of England meeting.
Right, so everything on key numbers there, 151 is all the sort of support areas there.
Absolutely.
Looking at that. Right, you managed to solve one of the big riddles for the rest of the year with your focus. You're going to tell us how equity indices are going to perform over the next 3 months, which is a brave thing to do, I think.
Well, I'm not sure I'm going to tell you. I'm going to pose a few questions. So, yes, how will equity indices perform in the last quarter of 2015? So the majority of global equity indices are now underwater on a year-to-date basis. It might surprise people to note that Italy's MIB is actually the best performer out of this list of global equity indices, whilst Canada TSX index has actually been the worst performer, and you'll see Brazil following closely behind there. Yeah, I think the actual gain, in the MIBs quite impressive, north of 10% year to date. So I guess that tells you what you need to know about the 2 or 3 speed Europe and where people think the recovery is likely to come fastest and earliest.
Well, they decided that Italy was the best way of playing a QE, for instance.
I think so, yeah.
Or new QE.
Yeah, absolutely, yeah. Country most likely to benefit. Obviously, Spain's.
Or maybe they're just happy that Berlusconi's gone. It could
be both. A new broom, and they've got a massive bond market, the Italians, after all. So it's only natural, I suppose, that they should benefit from quantitative easing. The question, of course, on most people's lips will be: will we see a centre rally, a bounce back in the run-up to Christmas? And for myself, I'm not so sure. Contrarians will be wondering whether commodity-related indices such as Brazil, Australia, and the FTSE will recover. And I suppose if you're a long-term contrarian, you may be thinking about putting some money into 1 or 2 of those indices. For the States, it's really going to be all about Q3 earnings, which kick off next week with Alcoa reporting on the 8th of October after hours. So the question then is, will Q3 earnings push US equities back to gains for the year? Analysts have been pretty bearish about the prospects for Q3 earnings, which could go one of 2 ways. They could be proven to be right, or they could, as ever, sort of have massively clubbed it, and then see a few exciting beats which could drive things higher.
Yeah, so probably the latter scenario is the one that we're going to be looking for.
Yes, absolutely. But I think more than ever in this earnings quarter, it's going to be about guidance going forward, and what people, what US corporates are saying about how they anticipate trading in 2016 to go. So it should be a very interesting run into Christmas, that's for certain.
Okay, Darren Sinden, market commentator, Admiral Markets. Thanks for co-hosting the Wall Street Crossover Show. We'll be back again on Monday.